Welcome back to Investing Talk Podcast. Today, we're going to be taking a look at Hecla Mining, which is a pretty major player in the silver and gold mining industry.
Absolutely.
And Hecla trades under the ticker symbol HL. And it's been seeing some interesting activity lately, and we're going to try to break it all down for you today.
Yeah, it's been pretty wild.
So, that silver squeeze back in 2021. Well, Hecla just saw its highest weekly trading volume since then, like a massive 117 million shares traded.
Yeah,
It's a pretty significant surge,
that's a huge surge for sure.
and it's got a lot of people talking.
Yeah, and that kind of volume usually signals that there's a lot of interest from investors, and there are probably a couple factors driving this. One is definitely the recent increase we've seen in precious metal prices.
Yeah.
As investors, kind of look to those safe haven assets in times of uncertainty.
Right.
And then I think we're also seeing some of those more speculative traders trying to get in on the action too,
Yeah.
trying to capitalize on the price swings.
Yeah, absolutely. And, while there's that speculative element out there, it's also important to note that, Hecla's been putting up some pretty impressive numbers. Like, they just announced record annual revenues for 2024, bringing in almost $930 million. That's a 29% jump from the year before.
Yeah, and a lot of that is thanks to those higher silver and gold prices we were just talking about. I mean, in 2024, gold averaged over $2,400 an ounce, and silver hit 28.58.
But here's where things get a little interesting. Because despite these record revenues, Hecla's fourth quarter earnings actually fell short of what analysts were expecting. And this miss led to a drop in the stock price, about 14.6% on February 14th.
Yeah, and this difference between the revenue and earnings, that really kind of highlights the challenges that Hecla's been facing in terms of managing costs. And, especially some operational hurdles, particularly at their Keno Hill project.
Right, and for those who maybe aren't familiar with Keno Hill, it's a really key growth project for Hecla up in the Yukon Territory. And while it did produce a respectable 2.8 million ounces of silver in 2024, it's also been hit by, some permitting delays and some ramp-up issues.
Yeah, and these operational challenges, on top of the rising all-in sustaining costs of mining are definitely something to consider when you're evaluating Hecla as an investment.
Right, and when we talk about all-in sustaining costs, or AISC as it's often called, that represents the total cost to produce, an ounce of silver or gold. And when those costs go up, it really eats into a company's profit margins, even when metal prices are high.
For sure.
And then to make things even more interesting, Hecla made the decision to end its silver-linked dividend. And they did this to, free up some funds for projects like Keno Hill. But it's definitely created some buzz among investors.
Yeah, and it's understandable because, you have investors with different philosophies. Some investors see this as a really smart move for long-term growth, putting their faith in projects like Keno Hill, But then you have others who are looking for more immediate returns and are disappointed to see that dividend go.
Yeah, it's really important to understand both sides of that. When you're evaluating an investment, you really need to think about your own investment timeline and risk tolerance.
Exactly. And, speaking of risk tolerance, mining is inherently a volatile industry. There are so many factors outside of Hecla's control, like fluctuations in metal prices, which can have a huge impact on their bottom line.
That's a really great point, and it really just emphasizes how important diversification is in any investment portfolio. Never put all your eggs in one basket, especially in a sector like mining, which is so cyclical. So with all that said, where does this leave Hecla? What does the future hold for this company?
Well, despite some of these bumps in the road, the overall sentiment from analysts toward Hecla is still pretty positive. The consensus price target is $8.38, which suggests there's significant potential for it to grow from its current price of $5.57.
So there's definitely some optimism out there, but it seems like cautious optimism. Those operational challenges at Keno Hill and those rising mining costs, those are all factors that really need to be weighed against the potential for growth.
Yeah, and we can't forget about the macro environment either. What happens with things like interest rates and inflation and the overall demand for precious metals, that's all going to play a big role in how Hecla performs moving forward.
Right. Those are all things that smart investors are definitely watching. Now, if you want to learn more about technical analysis, we'll get into some of those indicators in the next segment. We'll look at how Hecla's stock is doing relative to its moving averages and what those signals might be telling us about its short-term and long-term trends. So stay with us, and we'll be right back after a quick word from our sponsors.
Welcome back to Investing Talk Podcast. Before the break, we were talking about Hecla Mining and, how it's been performing lately. And now let's kind of dig a little deeper into the, more technical aspects of Hecla's stock.
Yeah, you mentioned earlier that Hecla is currently trading above its 200-day moving average. Can you break that down for our listeners? Like, what exactly does that mean?
Yeah, so the 200-day moving average, it's basically a technical indicator that's used to figure out the long-term trend of a stock. And when a stock is trading above this average, it generally means it's in an upward trend, suggesting some strength over a longer period of time.
So in Hecla's case, this would suggest that investors are feeling pretty good about its long-term prospects, right?
Right, exactly.
Okay. But you also mentioned that it's having some trouble breaking through its 50-day moving average.
Yeah, that's right. The 50-day moving average gives us some insight into the shorter term momentum, and the fact that Hecla is currently below this average, it kind of points to some weakness in the short term or maybe some hesitation from buyers.
So it sounds like we have a bit of an interesting situation here where the long-term trend looks positive, but there's some uncertainty in the short term. How do we make sense of those two signals?
Well, it's not unusual for stocks to show these, sort of conflicting signals when you look at different time frames. It's kind of like a tug of war between the bulls and the bears.
So in this tug of war, is there a side that you're leaning towards?
While these technical indicators are definitely helpful and provide some valuable insights, it's really important to remember that they're just one piece of the puzzle.
Okay.
We also need to consider the company's fundamentals and what's going on in the broader market, the context.
Absolutely. You need to have that holistic view. So let's kind of shift gears back to those fundamentals and zoom out to the bigger picture. What's your take on the outlook for this silver and gold mining industry as a whole?
Well, right now, the industry is kind of at this crossroads with all these different factors converging, and it's generally looking pretty good for precious metals.
Yeah.
We talked about this earlier, but inflation is still a big concern for a lot of investors, which drives them towards assets that are seen as, a store of value like gold and silver.
And silver isn't just a safe haven asset. It's also really important for a lot of industrial uses, especially with the solar energy sector growing so rapidly.
Exactly. Silver is a crucial part of solar panels. And as the world focuses more and more on renewable energy sources, that demand for silver is only going to keep increasing.
So that rising demand combined with the worries about inflation and all the geopolitical uncertainty, that kind of paints a pretty favorable picture for the industry as a whole, doesn't it?
It does, but like any investment, there are always risks you have to consider.
Of course. What are some of those?
Well, one of the biggest risks for precious metals is a sudden shift in investor sentiment. Like if inflation were to cool down significantly or, geopolitical tensions eased, investors might start pulling out of those safe haven assets.
So keeping an eye on those global macroeconomic trends is really important.
Absolutely. Investors need to stay informed about what's happening around the world because it can have a big impact on specific sectors like mining. And, we also have to remember that the mining industry itself is inherently cyclical. Metal prices go up and down, and how well companies do tends to follow those cycles.
So it's not just about picking the right company, but also about timing your investments, right?
Exactly. It's a tricky balance.
Speaking of tricky bit, let's circle back to Hecla for a moment. One of the biggest things we talked about was their decision to get rid of the silver-linked dividend. And that's definitely caused a lot of discussion. What are the potential implications of this move for both the company and its investors?
Well, the goal is to free up capital so they can reinvest in growth projects, particularly Keno Hill. So it's a strategic move signaling their commitment to expanding their operations and hopefully, increasing earnings down the road.
So they're basically saying, we're going to give up some immediate returns to shareholders so we can hopefully generate even bigger returns in the future.
Right. But of course, there are risks involved, too.
What kind of risks?
Well, the success of this whole strategy really depends on how quickly and efficiently they can execute these growth projects. If Keno Hill keeps running into delays or costs start spiraling out of control, the lack of a dividend might not sit well with investors.
It's a gamble for sure, but I guess a calculated one. It seems like investors who believe in Hecla's long-term vision might see this as a good thing. But those who are looking for more immediate income or have doubts about Keno Hill, well, they might not be so happy.
It really boils down to those individual investment goals and how much risk someone is willing to take.
That's a good point to remember. So with all this information in mind, what are some of the key takeaways you would give our listeners who are thinking about investing in Hecla?
Well, Hecla mining is definitely an interesting opportunity. There's potential for rewards, but there are also some inherent risks. Their strong financial performance, especially those record revenues, shows they have a solid place in the market. But, those operational issues at Keno Hill and the rising costs of mining, those are definitely things that need to be carefully considered.
Right. It's a company that operates in a very dynamic industry, and it's influenced by a lot of different macroeconomic factors.
Absolutely. Investors need to stay informed, do their research, and make sure any investment decisions they make are aligned with their own risk profile and financial goals.
That's great advice. And, we're here to provide information and insights, but ultimately the decision to invest is up to each individual listener. Before we move on to our final thoughts, we'd like to remind our listeners to subscribe to Investing Talk podcast. If you're enjoying the episode, please hit that subscribe button and leave us a comment. We'd love to hear what you think about Hecla mining, the silver and gold industry, or any other investment topics you'd like us to cover.
We really appreciate your feedback and engagement. Now, let's wrap things up by going back over some of the key themes we've discussed and offering the final insights for our listeners.
All right, so as we wrap up our look at Hecla mining, let's take a minute to kind of summarize the key takeaways for our listeners. We started off talking about those really impressive revenue numbers, almost $930 million for 2024. I mean, that really shows how Hecla's been able to take advantage of the good market conditions for precious metals.
Yeah, and while revenue is definitely important, we also spent some time talking about profitability, and the things that can impact a company's bottom line. Like when we talked about Hecla's earnings miss in the fourth quarter and the issues they're having at Keno Hill, that really highlighted that point.
Yeah, Keno Hill definitely kept coming up in our conversation.
Yeah.
I mean, it represents a huge opportunity for growth, but also, potential risk for Hecla.
Right. The permitting delays and those ramp-up problems at Keno Hill, they really show just how complex and uncertain the mining industry can be. It's a good reminder that if you're thinking about investing in this sector, you really need to understand how well the company can operate and what's happening in the overall market.
We also talked about Hecla's decision to end that silver-linked dividend,
Hmm.
and that's definitely gotten investors talking. Some people like the focus on long-term growth, but others are bummed about losing that immediate income.
It really comes down to making sure your investment strategy matches your own goals and risk tolerance. Are you looking for growth or are you more interested in getting income now? Those are the kind of questions you have to ask yourself before investing in any company, especially in a sector like mining that can change so quickly.
Then we zoomed out a bit and looked at the bigger picture for the silver and gold mining industry. We talked about the reasons why demand for precious metals is going up, things like inflation concerns, geopolitical uncertainty, and how silver is being used more and more in industrial applications like solar energy.
All those factors seem to point to a positive outlook for the industry. But like we said, investors still need to be cautious and keep an eye out for any potential problems. Things like a change in investor sentiment, a drop in metal prices, or unexpected operational issues can all affect how mining companies perform.
Well, I think we've covered a lot of ground today and hopefully given our listeners some valuable insights into Hecla mining and the precious metals market as a whole. We encourage you to do your own research, stay up to date on what's happening in the market, and maybe even talk to a financial advisor before making any investment decisions.
Remember, knowledge is power when it comes to investing. The more you know and the better you understand how the market works, the better decisions you'll be able to make, and the more confident you'll feel navigating the financial world.
We hope you found this look at Hecla mining helpful and interesting. And if you enjoyed this episode, please subscribe to Investing Talk podcast and leave us a comment. We'd love to hear your thoughts and are always looking for ways to make our content even better.
Thanks for joining us, and until next time, happy investing.